John Koudounis is a leader in global finance with more than 3 decades of experience. As CEO of Calamos Investments, he has grown the firm into a globally recognized asset manager with a focus on alternatives, growth equity, and sustainable investing. Previously, he made history as the first American to lead a Japanese-owned investment bank, serving as CEO of Mizuho Securities USA. He has advised governments, corporations, and institutions on markets and global strategy. Beyond finance, John is committed to philanthropy, serving on the Concordia Leadership Council, World Business Chicago's Board of Trustees, and as a founding board member of the Hellenic Initiative. John, welcome to the Swift Hour.
Thank you very much, Matt.
So you were the opening speaker of the 15th Concordia Annual Summit, and I want to talk to you about Bitcoin, of course, which is very front of mind when I think of the work you're doing with Calamos, but I want to start talking about the global economy and what you see today, because you've worked in finance through great moments and through some of the most challenging moments in the markets. Big picture, how are you feeling about the markets today?
I have to say I'm very optimistic. I think a lot of the markets are hitting all-time highs in terms of a lot of the equity markets. Now, we shouldn't confuse the markets with the economy, but I think both of them are pretty strong and extremely resilient. And so we see that in what's happening. We saw that when the president dropped the bomb of the tariffs.
Liberation Day,
and what that did to the markets, but how quickly they recovered. And it clearly, we don't have everything ironed out, but the markets are extremely resilient, and they're very positive thinking, and they're shown to be positive about these tariffs. And they think that in the long run, they're going to be good for the markets, or we wouldn't see these all-time highs.
So when you look at different barometers of the health and state of the economy, what are those barometers you're constantly looking for?
So we're constantly looking at inflation is really important. We're looking at employment is those two things are a lot of the main drivers. And employment's going to be tricky because AI is here, and it's going to change the landscape. How it's going to change it, we're not sure. But I think it'll find its equilibrium like all the new technology has had. And there's always going to be need for people to work with AI and other things. And so I think although there might be a huge delta in type of jobs that might be out there, I think it's not going to be like there's no jobs anymore. So I think that people that are scared of that, there will be volatility, but there's clearly going to adjust to the technology as it continues to grow.
The uncertainty piece that you reference, there are certain factors that governments and industry leaders can protect against, and there's certain factors that they cannot. The push from the Trump administration to bring manufacturing back to the United States, coming at the same time that AI and technology is replacing humans when it comes to workflow and opportunities in those pieces. Do you think that we are going to operate in this era of, let's call it, light uncertainty, of not knowing for some time? Because I'm waiting for someone in finance to say, all right, now I feel good. Now I feel this is exactly where we're going.
I don't think there's ever a time where everybody's extremely comfortable and they're 100% convicted, right? So, at the beginning of the year, there were certain things that we were really keyed in on. Will we be able to pass? Will the Congress be able to pass the One Big Beautiful Bill? Because if they didn't, that would be extremely, extremely bad for the markets and for the economy, because people got used to the tax cuts. And if they had to go up, it would be the largest tax increase in the history of this country, which I don't think we would be able to weather that storm. I think that would have taken the economy down a lot. So That uncertainty, I think, is no longer an issue. Another one is how the tariffs were going to play out. We've seen the markets jump back. We've seen some of the deals that have been made with certain countries. I think that it's going well, and the markets are telling us it's going well. I'm not as worried about that. That's not a major threat that it was several months ago. So I think that's wiped out. Now, the ones that are still out there is we don't know what's going to happen in terms of event risk in the wars. What, with Ukraine, the narrative keeps changing. It changed yesterday with Europe. We don't know what's going to happen with Israel. Those are going to be clearly impactful to the world. We're hoping that that will get smoothed out. But those are the two main concerns right now in terms of shaking up the economy and stuff. But there's a lot of positive things. Energy being down, we still haven't seen how that's going to affect us in a big positive way when gas is much cheaper, transportation, goods, to the grocery store, that's all getting reflected, and it's really gonna start to show up a lot more. Deregulation, that takes a while to get in, and so we got a lot more positives coming because of the deregulation of this administration that is done. And another thing is the Fed is starting to cut rates finally. If we can get rates in the 10-year down below 4%, it's a big, big number because that will ignite the mortgage market and the housing market. It's like kind of a pivotal way. A lot of the mortgages, 70% of this country has mortgages that are 5% or lower. That's a big number. So they're not moving. That's a decent thing. So actually another 20% at 3% or lower. So if you can't refinance for a close to the same number, you're not refinancing because it's cheap money. So the markets, even though it's okay, if you really want to boom, which is a major, major part of the economy is housing, you get that 10-year down, below 4%, and you start to get mortgages 6 and below, then you start to see people maybe start to move a lot. And we saw that every single time 10-year hit below 4, you see applications rates go through the moon. And that's something that's really, really important to the economy, a big driver, right? And then the investment you talk about, that's going to take time, but that's a huge plus. All these companies that have committed to this administration to invest in the United States, those are huge numbers that are big.
And the country commitments in general. Following the president's trip through the Middle East, those are some pretty remarkable commitments.
Very, very remarkable. So those are all positive things. And that's why you're seeing the markets are all-time highs. And you know what? It's going to continue to go up, unless barring, some nasty wars or so.
When you're a global finance leader, not just an American finance leader, as I mentioned in your introduction, your background being the CEO of Mizuho, but you're also a very proud Greek American. Talk a bit about the market outside the United States. Are you bullish?
Well, I think that it's a case-by-case situation, right? So there's certain countries that I'm bullish about.
Well, let's start with Greece. Greece has had this remarkable turnaround. I believe it's now the fastest growing economy in Europe.
Yes. I'm clearly bullish on Greece. I've been bullish on Greece, I'm probably not a good indication because I'm Greek American and my heartstrings, kind of lead in that, and so I'm always probably more optimistic than I should be. But this time, I think it's pretty objective because we see that the numbers that are coming through, and there's stability in that country that the administration there, the prime minister, has really brought into the area. And foreign capital will always looks for stability. And so it's been a huge positive in the region. And it seems that Prime Minister Kyriakos Mitsotakis is the grown-up in the region, is doing a phenomenal job. Look, the world's not perfect, the country's not perfect, but it's so much better off than it was before he got in office. It's stable, and there's a lot of money from the diaspora pouring into Greece. And that shows what's happening. That tells people there's confidence because of the stability, and they're putting money in there. And, put your money where your mouth is, and that's what's happening in Greece. So there's a lot of investment. we're personally investing in Greece, and I think it's a great opportunity there. And there's other opportunities around the world, but not every place is great. And there's still phenomenal opportunity in the United States. So you don't have to look too far. And sectors too, like whether it be technology and healthcare, and there's so many incredible advances that are happening in those two sectors that it's hard not to look at and really try to decipher the good from the bad and jump in.
I want to shift to a topic that I think is on everyone's minds and certainly in portfolios, Bitcoin. It's been seen as a, frankly, highly volatile commodity, but Calamos recently released research that advocates for Bitcoin allocations 10x higher than the current recommended amount, which is currently only 1% to 2% of a portfolio. How do you think financial advisors will embrace this new asset class in traditional portfolios?
Well, if you look at the performance of Bitcoin, it's been incredible. And it's been the best performing asset in the last 10 to 12 years. No asset class is even close. Having said that, it's extremely volatile. And depending when you bought it, you could have lost a lot of money or made a lot of money if you've held on to it. Most people don't have the appetite or the ability, especially if it's too big of their portfolio, to be able to weather those storms. So at Calamos, because our DNA is our founder, John Koudounis, has done an incredible job in building a firm and investments in convertibles. And he's written a couple of books. We use them in a lot of our funds. We're the largest buyer in the country, second largest in the world, of convertible bonds. And convertibles are a risk-managed asset, and that's what we do. So it limits a little bit of your upside, but it dampens your downside. And so we take that theory along with trying to democratize product that mom and pop couldn't usually get on their own. And we are creating products that fit our DNA and also help mom and pop invest in stuff that are really, really sophisticated. So in January, after looking at this, and I had a committee set up for 5 years beforehand, we've launched, because the markets finally created an index in Bitcoin, the Chicago Board of Options Exchange, where we work together with, the SEC finally allowed them to create an index. And that was only because the current administration was coming in. And so they knew that they softened up because they were very difficult to work with before. They created an index on Bitcoin. And so we were able to create the first 100% downside protected Bitcoin ETF. So you can buy the ETF, you can participate in a certain amount of the upside, and as long as you kept it for the year, no matter if it went down 20, 30, 50, 60%, which it has in a couple of years, you wouldn't lose a penny. And so and with not holding any underlying Bitcoin, we buy Treasury zeros, we buy options, and we sell out of the money options to create these vehicles so people can be protected and still participate. So it's kind of an on-ramp into the ecosystem of crypto, which is here, especially Bitcoin. It's not going anywhere. The bus has left the terminal. It's a big, big asset class that's here to stay. And we're seeing that where the administration is using it and buying it. And
because they sort of opened the floodgates to this. It was such a dramatic policy shift from the last administration.
They understand that it's not going anywhere, so why not try to lead instead of follow? Because it could be China, could be somebody else that takes the lead in it, and it's such an opportunity for us to be for the United States to be world's leaders in it. And I applaud the administration for taking this stance, because I think it's a big competitive advantage for us to be number one in the world in crypto, especially Bitcoin, which is proven to be here to stay, and they're using that as a part of the reserves. So you're looking at it as gold, as oil, as uranium now. So it's here. It's here to stay, but it's not for everyone unless you can use it in a risk managed way. Now, the reason we have a higher percentage of our recommendation for the portfolio, it's not just long Bitcoin, it's long some of our products. So we also have a 90% protected, which gives you more upside. We have an 80% protected, which gives you even more upside. So for instance, the 90% might get you, high 20s, low 30s of the upside. And the 80%, which is up and down 20%, might get you in the low 50% of the upside. So not 50% of the upside, but 50 percentage points. So it actually, when you think about it, the 80% product is almost very similar in the way equities work, because equity markets can go down at times up to 20%. But the average upside in equity markets, if you look at the S&P over the last, 20 years, is around 9.5%, 10%. Where Bitcoin, you can get up to closer to 50. So I think that it works, if it's risk managed that way, as a really nice substitute for part of your equity portfolio, because it acts a little bit more like an equity given the risk measurements on that. So that we're seeing a lot of interest in more institutions in buying some of the 80%, where a lot of the retail buyers and a lot of like the retirement stuff is more on the 100% side.
Two things I want to ask you though on this as a follow-up is because I want a little more context to both where the U.S. in this space is globally, and then where Calamos is industry-wide. How unique is what's happening today, and how powerful is what's happening today? Where are other countries following the U.S., or are we following other countries? Sounds like Calamos, from what you're describing, is a real leader in this, and not following the rest of the industry. You all, especially the backing and the risk element that you've talked about.
Well, there's other countries in South America that
El Salvador,
right, that has been leaders in Bitcoin, right? The Japanese are very, very big in Bitcoin. So there's a lot of countries that kind of came out of the gate actually more advanced than the United States. Now, Bitcoin is really interesting, and the entire crypto world is really interesting because it's actually led by retail, where it's one of the first products and product base that's led by retail. Most of the times, institutionals are the ones that lead in different products. And so why do I think Bitcoin and crypto is only in the beginning innings is because it's gotten so big with just retail and the power of retail that now the institutions are starting to look at it where there's a lot of money that's involved. So when that money comes in, it's gonna take this thing much, much higher. So the conversations that are happening and that we're having, but not just us, even the biggest asset managers in the world, like Larry Fink at BlackRock, when he's talking to the largest sovereign wealth and the funds in the world, it's not, are you buying Bitcoin? It's, how much is your allocation? Is it 2? Is it 5%? That's the conversation now. Wasn't happening.
Big shift.
360 days ago. It's happening now. How much, not if. And it's interesting because as we're onboarding our product, a lot of our successes in our other products, like our market neutral fund, which is a $16 billion fund, is we platform our funds in all the major houses like Morgan Stanley, Wells Fargo, Merrill Lynch, JP Morgan, and whatnot. And we have those advisors selling our products. So we wholesale to them. It's been very difficult. We couldn't even have a conversation with any of the banks because of the word Bitcoin. We're not doing it. We're not looking at it. It's not happening.
Non-starter.
Non-starter. We've been talking to them for the last couple of years.
Yeah.
The conversations now are, we love your product. We're going to the board. We're going to get Bitcoin approved. You'll be the first ones on our platform. Stay tuned. And that's happening with almost every single bank. The tone has changed. It's happening. We're seeing the inside of it. We're queued up to lead it because we were the first starters in it. And it's refreshing because those conversations were not happening earlier. They didn't want anything to do with that. And you're seeing the tone, even with Jamie Dimon and stuff, where he was adamant against it, not so much anymore. So it's changed because it's gotten too big where people need to deal with it now.
I want to bring this back to you and your career. What are some of the, if you could go back when you just were starting in finance and banking, and tell yourself something at that time based on all the experience you've now had, what would you say to yourself? What advice would you give to a 22-year-old John Koudounis?
Wow. Look, it's the advice that I took, and it's you need to enjoy what you're doing, and I really enjoy what I do, and so it's never really work. Being the first one in and the last one out was something that just always happened, up until just a few years ago, where I'm not the first one in, but I'm usually the last one out still. But it's a little harder for me to get up at 4 a.m. every day. But so when you work really hard and you go after and chase it, things start to happen. And I always I've been very fortunate where I've had great experiences that I've learned through and learned by, and I never, if I'm the smartest guy in the room, I need to go to a different room, because I really always enjoy learning. And I'd like to surround myself with really great people. And that's why I have a great team of executives, because that's the only way you can do it. You can't do it by yourself. And so all my executives are top notch. And I think listening is the best medicine, because that's how you learn. I keep learning. And the best way to learn is through experiences. School is, for sure, you need a foundation to learn how to think. But the experiences that we've had, and I can call back on them, has been huge. And one of the amazing things that I actually had a coach when I was transitioning from middle management to upper management, and they taught me, and actually she taught me, was to transition from running a business to managing a business. And people are like, what does that mean? Well, at first, when I was a middle manager, I used to run businesses that I could do in my sleep, because I had experience in those things. If I had a trader trading mortgages or high yield or whatever that wasn't doing well, I felt that I could sit in their seat and trade their position, and it wouldn't be an issue. Or if there was a M&A deal, I could sit across the table and close it for the banker. Now, as your role gets bigger as a CEO of a global bank, I've not done everything. I never used to do loans and stuff, even though that came under wet preview at a certain point. You have to have managers, and you have to trust your managers. So, I have at one point every day, but now it's a couple times a week, where I have my CEO meetings, and I have my direct reports that manage all the businesses for me. And if the manager gives me an update, in 2-minute update, if something's not right or whatever, I dig into it. If not, you let them go and run the business and stuff. And so your gut has a lot to do with it too, but you have to let your people run their businesses. And if you can't understand it, or if there seems like it's not right, if the numbers aren't looking good, then you can go deep on it, because you can't go deep on everything. And you have to have great people around you, and people that you can trust. So that's been the way to learn to manage, have people do it for you, and learn how to run those people, because you can't run everything. And so you have to learn how to manage everything. And so that had been a big transitioning point to me. And I think especially Wall Street is is not known for good managers. There's always good traders, there's always good investors, there's always good hedge fund managers, but actual CEOs. And that's why for the first time, there's been great CEOs that have stayed in the seat longer. Most CEOs don't last for less than 5 years is the average duration. But then you look at Jamie Dimon, you look at Brian Moynihan.
Decades.
They've been there, yeah. And so they're a standout and they're incredible. I know them both are amazing people. And it's a very difficult skill set to acquire, but they've done a great job on it.
Well, John Koudounis, CEO of Calamos Investments, thank you for this. I really enjoyed this conversation, and also especially learning the ways that Calamos is really a leader globally on so many different fronts, and what you've done to scale the firm in the way that you have, following an incredible career at Mizuho and of course Wall Street. This insight is fantastic. So thank you.
Thank you, Matt. Appreciate it.